What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be speaking about the one, the only Amazon. Amazon is a company who, if you invested in these guys when they went public back in '97, they would have returned you over 150,000% as of right now. That is a lot of percent. On the 5-year chart, over 500%. And on the 6-month chart, where the S&P 500 is still down, Amazon would have returned very close to 50%, guys. So they're one of the FANG stocks, one of my favorite companies to buy right now, but a lot of people are afraid to invest in Amazon. And one of the biggest reasons, and one of the things that I see brought up the most in my comment section personally, is Amazon's PE ratio, which is currently trading over 120, which is a massive PE ratio. And very much so, Amazon is what we would say price to perfection. A few comparisons, okay? The S&P, for example, is at a PE ratio of about 22. Facebook is at a PE ratio of about 34, so another massive tech company, and Apple is at a PE ratio of only 27. So that 128 really does seem very high. The question has to be asked, is it justified? And that's exactly what we're going to try and find out in today's video. Now, I am an Amazon shareholder, so I may be a little bit biased, but I'm just going to try and give my thoughts and opinions. My position is literally 0.15 of a share. I will show you that on the screen right now. But they are a $2,600 company. It's going to take me a while to get a full share. If you enjoyed today's video, guys, can I please ask you to smash a like? Let's say if we hit 400 likes, I will make my next video speaking about Apple. Also, if you're new around here, please hit that subscribe button. We just hit 8,400 subs. We want 10k by the end of next month. We are very much so on track. Let's keep it going, please. And drop me a comment down below. Let me know what your thoughts on Amazon stock as a whole is. You know, if you're invested, if you think they're overvalued, if you think we're going into the next .com bubble, let me know your thoughts. And with all that being said, guys, let's get straight into the video. So we're going to start it off with some of the absolute basics, okay? First thing we're going to do, we'll have a look at the stock chart. Then we're going to have a look at the PE ratio history. Then we're going to have a look at the balance sheet. So on the 6-month chart, normally, you know, we would have seen up and we would have seen down and a little recovery, still below those recent highs. But Amazon have gone ahead, right? And you know, they had their down very briefly, and they've just gone ahead and made these massive new highs of very close to 50%. The most they dropped was about 22%, and this was when everybody was panicking, and a lot of people were just selling their entire portfolios. The S&P 500 dropped about 34% from the highs to the lows. The Nasdaq Composite dropped about 30% and has made new highs of 1.3%. All in all, Amazon's performance has absolutely smashed the overall market to pieces. Now, I want to speak about this number right here, the PE ratio that is at 127.78. Massive. We look back through history, okay? The last couple of years, we've had 90s, 80s, 70s. Before that, there was 130s. This is back mid-2018, early 2018. 182. 190, 244, 245, okay? For the last 5+ years, these guys have had very high PE ratios. And I mean, at this stage, look, we're looking at a PE ratio of 741 when the stock's price was only at $511. And the EPS was 69 cents a share. As of right now, the latest numbers we have, PE ratio 127.81. The price is $2,675, and our most recent EPS is $20.93. So is Amazon priced to perfection? To an extent, yes, but it's not exactly like the PE ratio is at all-time highs. And given the fact that the stock price is currently so high, and it has outperformed the very terrible market, I don't think the PE ratio is the biggest deal in the whole world. Now we'll have a look at the balance sheet. Current assets, pretty much 86 billion, okay? Total assets are at 221 billion. We go down to our current liabilities, which are at 79 billion. So, you know, it's under our current assets. They're in a good position in the short term, okay? And then in the long term, we're in a fantastic position when we see total liabilities of about 156 billion compared to our total assets of 221 billion. And this is going to bring us on to the Q1 earnings and what we can expect from Q2 and Q3 going forwards. And just right before we get into that, what I want to show you is this, okay? If you're a share owner in Amazon, you may want to take a seat. Amazon reports earnings plans to spend all Q2 profits on Roni response. Now, I've seen a few people try and make this a negative thing, the fact that they're going to spend all of their Q2 profits and potentially some more in response to the virus. How is that a bad thing, people? I mean, this is something that's going to have to be done. It's something that's being done by every company worldwide. This is not a negative thing by any means, okay? Take Carnival, for example, okay? Remember when they took on all of the debt at really high interest rates just to give themselves a chance of survivability? And people thought it was great, you know, they were doing everything they could, they were giving themselves a chance. Amazon is just making enough money to do these things. They didn't have to go take any debt, they're doing what they have to do, and they're in an absolutely fantastic position. So to me, spending your Q2 profits in response to a worldwide pandemic, it's not a bad thing. Okay, so our Q1 results. Operating cash flow increased 16%. Free cash flow increased to 24.3 billion for the trailing 12 months compared with 23 billion for the trailing 12 months ended March 31st, 2019. Free cash flow less principal repayments of finance leases and financing obligations decreased to 14.3 billion compared with 15.1 billion. Net sales increased 26% in the first quarter compared to the first quarter of 2019. 26% year-over-year quarter growth. Now, sales doesn't necessarily equal profit, okay? So operating income decreased 4 billion in the first quarter compared with operating income of $4.4 billion in the first quarter of 2019. And net income decreased to $2.5 billion in the first income, or $5.01 per diluted share, compared with net income of $3.6 billion, or 7.09 cents per diluted share in the first quarter of 2019. So a little bit of a mixed bag of a balance sheet. Not the clearest thing in the world. Are things good or are things bad? Well, first of all, there's no denying the fact that net sales increasing 26% is a very, very good thing. Expenses have gone up, okay? Much of Amazon's earnings release centered on its response to the virus. On the other hand, they have said that they expect net sales to come in between 75 billion and 81 billion, representing a year-over-year growth between 18% and 28%, okay? The company anticipates a range of an operating loss of 1.5 billion to an operating income of 1.5 billion, and that is based on its expectations of spending $4 billion on ROLI-related fees. Did I say ROLI? RONI-related fees. So things are going fantastically for Amazon. They obviously just have to spend more money in order to keep everybody safe, both employees and consumers. And what that $4 billion is going to go to is virus-related expenses, getting products to customers and keeping employees safe. This includes investments in PPE, enhancing cleaning of our facilities, less efficient process paths that better allow for effective social distancing, higher wages for hourly teams, and hundreds of millions to develop our own virus testing capabilities. It's all fantastic stuff. They made over 150 significant process changes in our operation networks and whole food market stores to help teams stay healthy, and they conduct daily audits of the measures that have been put into place. They've procured 100 million face masks and are requiring that they be worn by all associates, drivers and support staff in their operations network. They purchased more than 1,000 thermal cameras and 31,000 thermometers. And they now have a team who have moved from their normal day jobs to a dedicated team working to build incremental testing capacity. Now, nothing may come of this, but it's exciting. In March and April, they announced plans and have now hired 175,000 people in their fulfillment and delivery network in response to increased customer demand. And they've increased hourly pay for everyone. I mean, come on, guys. Like, they're doing amazing. And that's just what they're doing for the employees, okay? You can have a look through this, okay? What we're doing for our customers. It is a massive, big long list. Massive. And it's all amazing. Now I want to speak about Amazon Web Services, AWS. Amazon Web Services is the world's most comprehensive and broadly adopted cloud platform, offering over 175 fully featured services from data centers globally. Millions of customers, including the fastest growing startups, largest enterprises and leading government agencies, are using AWS to lower costs, become more agile and innovate faster. They're the world's leading cloud platform. They're the most functional, they have the largest community of customers and partners, they're the most secure, they have the fastest pace of innovation, which Amazon does for pretty much everything. They have the most proven operational expertise. I mean, so many people use this service, okay? Formula 1 Group uses Amazon SageMaker to optimize racing. Royal Dutch Shell uses it to proactively identify cybersecurity threats. Startups like Lyft and Airbnb are using the service, and massive public sectors such as FINRA, they collect and analyze billions of brokerage transactions daily using AWS. The FDA uses AWS to deliver cost-effective, innovative new programs. And here's AWS revenue from 2013 to 2019, and you can see just how quickly it has grown. From 3 billion in 2013 to 35 billion in 2019. It has been some serious growth. We have a quick look at Amazon Prime, okay? The number of Amazon Prime members worldwide in 2019, 150 million. And 112 million of those are from the US. And the average annual amount spent by Amazon Prime members in the US in the first quarter of 2019 was $1,400. And this number has been going up and up. So since September 2017, when it was 90 million, it's gone all the way up to 112 million. I mean, the growth has been fantastic. And there are now many analysts, okay, predicting Amazon to hit over $5,000 in a matter of only a few years. Laura Martin, a Needham analyst, said, "We calculate that Amazon is worth between $4,500 and $5,000 a share in the long term." And this would give the company a market cap of between 2.2 trillion and 2.5 trillion based on their current share count. And I just showed you Amazon Web Services and how fast that that is growing. And a lot of investors are underestimating the value of Amazon's media assets, which includes Prime Video, Prime Music, and Twitch, the company's video game streaming platform. These hidden value assets, as she calls them, are worth $500 billion, which is nearly as valuable as Amazon Web Service. They are so diversified, and pretty much everything they touch just turns to gold. Look at this in regards to Amazon Prime. About 93% of Prime customers continue their membership after 1 year, and 98% stay on the rolls after 2 years. That is massive. I mean, most people sign up for a free trial and cancel it before the first payment gets taken out. I'm one of those people. Amazon and Adobe Photoshop are the only two services I've subscribed to pretty much ever for more than a year, and I've no plans on stopping either of them. And we were just speaking about the fact that the average person with a Prime membership spends $1,400 a year. And we've also seen just how many more people are getting Prime memberships every single year. That's a lot of extra revenue for the company. Honestly, guys, I don't see what is not to just absolutely love about this company. And one more thing to mention, Jeff Bezos, the CEO. What an absolutely genius man, the richest man in the world. I just see Amazon as one of these massive tech companies who has so much potential and has proved that they will do everything in their power to keep growing. I mean, it has been an amazing last while in recent history. So I am a very happy investor. I do plan on buying more in these guys, and I do plan on having these guys take up a decent portion of my portfolio, being one of my top 5 companies for a long time. So guys, that is it for today's video. I really do hope that you enjoyed. If you've watched till the end and you haven't liked the video yet, please hit that button for me. It genuinely helps me out so much. And as I said, if we hit those 400 likes, I will make a video on Apple next, and we will work our way through all of the FANG stocks. I understand why people might not want to invest. You know, a lot of people think we're heading into the next tech bubble. A lot of people think these companies' valuations are absolutely crazy. But me personally, after everything I've gone through today, I really love the look of Amazon as a company. So guys, I hope you all have an absolutely fantastic day. I hope it's a good week for you. Hope the stock market treats us all well, and there's not going to be too many red days. There won't be too many sad people out there. Hope you all have an absolutely fantastic day, people. Really appreciate you watching this video till the end. I will see you for tomorrow's video. Peace.